I always say that the key to mastering trading lies in understanding the core of market structures. So when I put out the poll across my social media asking you guys what would you like to see more, and the majority said more chart work and real-time technical analysis videos. So that's exactly what I have prepared for you today, a live trade breakdown. So we are not just gonna look at the hows, but we also gonna dive into the whys behind the trade. So set everything else aside, maybe get a notepad ready, and let's get started. So let's jump right into the charts, and I will walk you through my analysis and just my thoughts on the market so far. So we are currently observing a clear downward structure because we notice patterns of lower highs followed by higher lows, and then again lower highs, and now we have a lower lows. And at the moment the price is hanging around the same level as the previous low, and in this position we can expect only two scenarios, which would be a further decline if the price closes lower than the previous one, or it will bounce off this zone, potentially initiating a higher time frame bullish reversal. Of course, we still have 6 days left until the candlestick closure, and a lot can change during this period, especially when you factor in fundamental analysis, but we will get there later on and I will show you why. So if you take a look over here, we have this strong resistance zone that has been tested multiple times, because if we have a look at these long upper wicks, we can see that even though the buyers pushed the price to the zone, the result of a candlestick closure was in a seller's favor, because each time it dropped towards the downside. And looking further, we have strong monthly support over here based on these candlestick rejections that failed to break it below. Another crucial factor to consider, especially when analyzing higher time frames, is the psychological level, such as this one over here. So we have pretty much the same scenario confirming bearish bias, and I would even say that this is a resistance level, since all of these long upper shadows bounced off the level, showing that the selling interest become strong enough to stop the price from advancing further. Now moving on to the weekly chart, we have a powerful descending price channel which forms during a downtrend. However, this is where things get interesting, because the way I currently see this price action forming is by looking at this weekly candlestick. So this candlestick signals a potential weakening of the downtrend, because first of all, it failed to reach the lower channel line, especially since the price has also bounced from the weekly support level over here. So on the daily, we had the support over here that was successfully broken and now stands as a resistance, and the price is basically stuck in between these two levels, again in a strong downtrend. Now on the 4-hour chart, my focus is drawn to this uptrend, and at the moment we had a recent closure of a bullish engulfing, but now it seems like the sellers are getting in control and we are seeing a formation of a bearish engulfing candlestick. And I believe this could be a great opportunity to profit by maybe scalping on a lower time frames, potentially targeting this resistance zone, which would be around 45 to maximum 50 pips away. So to spice things up, if you can identify a chart pattern in 3, 2, 1. If you can take a look again at this uptrend and this resistance, it adds up to an ascending triangle chart pattern. Now the question is, which direction will it go? Will the buyers be able to break that level, or will the resistance will be too strong? So yes, sometimes the resistance level is too strong and there is simply not enough buying power to push it through. And most of the time the price will in fact go up, but the point I'm trying to make is that you should not be obsessed with which direction the price goes, but you should be ready for the movement in either direction. So let's say we see a successful break through the resistance zone, maybe a push exhaustion scenario, and we expect a price to move towards an upside. But if the price fails to break through a higher time frame resistance, which is this zone, we should keep an eye out for a a potential reversal towards the downside. So when I mentioned that we still have 6 days left until the monthly candlestick will close and a lot of things could happen, let's take a look at economic calendar, because trading technicals is one thing. However, it's the combination of these technical patterns with the real world events that could supercharge our trading decisions, and let me explain why. So fundamental analysis is the big picture. It's understanding the global events, economic policies, and news that directly impact the strength or weakness of a currency. So for example, if there is a major policy announcement coming up for Australia or Canada, it could dramatically affect the AUDCAD pair that we have been discussing. So taking a look at the upcoming week, we see that there is a few significant events to watch out for the AUD. On Monday, we have the Australian retail sales figures coming out, and then on Wednesday, there is the consumer price index release. So these are the biggies, and here's why. So if these data points come out stronger than anticipated, it could provide the necessary momentum for AUDCAD to challenge and perhaps even break through our observed resistance zones. On the other hand, if the economic data is bearish, it might strengthen our bearish bias from the technical chart, giving us more confidence in a short position. So last time we took a deep dive into both the technical and fundamental aspects of this pair. Now let's see how things have unfolded since our last chat. So on Monday, the retail sales were released and the numbers came out positive because the previous one was minus 0.8% and the actual came out 0.5. So seeing this positive economic growth anticipates bullish trends, and this is what we can see on the AUDCAD chart. And if you can take a look at this uptrend we have talked about earlier on, we can see that in this case the selling pressure wasn't strong enough to break it through, even though it tried to do that multiple times but was rejected by that uptrend. And as we can see, the price has successfully broken through the resistance of an ascending triangle chart pattern. And as of today, which is Wednesday the 30th of August, we had a monthly consumer price index data release, which was again in the AUD's favor. So that's why we see this huge around 62 pip move bullish engulfing closure bouncing off a support as a reaction to the news. So I actually placed this trade myself, and I will attach a screen recording of the profits just right now. So this was my entry from the broker that I got, so I just quickly copied to the trading view. My stop loss is 50 pips covering my moving averages, and I was aiming for that initial resistance that we have talked about, which was around 40 pips in total. But due to the release of the news that we have talked about, the trade eventually shot towards an upside, resulting in around 92 pips in a total profit. So looking back on the calendar, Friday the September 1st seems to be a super huge day when it comes to the news. So we're gonna start off with S&P Global Manufacturing PMI, but later on we're gonna have all of these news: non-farm payrolls, unemployment rate, GDP quarter 2 for AUDCAD, and the rest of these news, which will undoubtedly move the market, including AUDCAD pair as well. So basically for now, I will be on the lookout to see whether this resistance will be broken or if I see a potential reversal towards the downside, since the overall trend is on a strong bearish side. So by now you've gotten a deep look into the market structure, but let's say you can supercharge this knowledge with a proven scalping trading strategy. It sounds brilliant, right? Well, that's exactly what my previous video is all about. So if you're hungry to level up your trading game, make sure to watch this video next.